Imagine, the greatest obstacle to becoming a profitable trader isn't the market. It isn't Wall Street. It isn't your strategy. It isn't even your experience. It's your brain. Right now, as you're watching this, your brain is trying to protect you. It's doing exactly what millions of years of evolution taught it to do. Avoid danger, seek certainty, chase rewards, escape pain. For most of human history, those instincts kept us alive. They helped us survive predators, find food, protect our families. But then, something strange happened. Financial markets were invented, and for the first time in human history, the instincts that helped us survive started making us lose money. Think about it. When you touch a hot stove, your brain tells you to pull your hand away immediately. That's intelligent. But in trading, the same instinct creates panic. You see a losing trade, and your brain screams, "Get out!" Then, the market reverses. You see a winning trade, and your brain whispers, "Take the profit before it's gone." Moments later, the trend continues without you. It feels like the market is targeting you personally. It isn't. It's simply exposing how your brain is wired. Here's something fascinating. The market rewards behaviors that feel completely unnatural. Patience, delayed gratification, accepting uncertainty, taking small losses without emotion, doing absolutely nothing for hours or even days. Your brain hates every one of those things because your brain wasn't designed to beat financial markets. It was designed to keep you alive. That's why trading feels so difficult. You're trying to succeed in an environment that rewards the exact opposite of your natural instincts. And once you understand that, everything changes. Because you stop asking, "Why do I keep making mistakes?" You start asking, which instinct is controlling this decision? That single question might be the most valuable question a trader can ever ask. Because in the next section, you'll discover the first instinct that quietly destroys more trading accounts than bad strategies ever could. And almost everyone mistakes it for common sense. The first instinct is the need to be right. It sounds harmless, even intelligent. After all, who wants to be wrong? But the market sees it differently. Imagine a surgeon. During an operation, he realizes his original diagnosis was wrong. What does he do? Does he continue just to protect his ego? Of course not. He changes course immediately, because saving the patient is more important than protecting his pride. Trading demands the exact same mindset, yet most traders do the opposite. The market proves them wrong, and instead of accepting it, they argue. They move the stop loss, add more to the position, search social media for someone who agrees with them. Not because their analysis improved, because their ego needs validation. Think about that. The market isn't fighting your strategy. It's fighting your identity. Because the moment you attach your identity to being right, every losing trade feels like a personal attack. And that's dangerous. Professional traders understand something that beginners rarely do. A losing trade doesn't mean you're a bad trader. It means probability did exactly what probability sometimes does. That's all. Nothing more, nothing less. Imagine flipping a coin that lands heads 60% of the time. Would you still expect tails sometimes? Absolutely. Then why do traders treat every losing trade like proof their strategy is broken? Because the human brain doesn't naturally think in probabilities. It thinks in stories. One loss becomes, "I'm terrible." One big win becomes, "I've finally figured it out." Neither story is true. They're just emotions trying to explain randomness. Wall Street knows this. That's why professionals don't chase certainty. They chase consistency. They don't ask, "Was this trade profitable?" They ask, "Did I follow my process?" Those are two completely different questions. Here's something fascinating. Some of the greatest traders in history have admitted they were wrong hundreds of times every year, yet they still made fortunes. How? Because they accepted being wrong quickly. The average trader tries to avoid being wrong. The professional trader tries to avoid staying wrong. That's the difference. One protects the ego. The other protects the account. And over thousands of trades, that difference becomes enormous. Because every time you choose your ego over your rules, you're training your brain to repeat the same mistake. But every time you accept a small loss without emotion, you're building something far more valuable than confidence. You're building trust in your process. And that's the first instinct the market forces you to overcome, but it's not the strongest one. There's another instinct hidden deep inside every human brain, that quietly destroys more traders than fear, greed, or even bad strategies. Ironically, it feels so natural. Most people never realize it's happening. There's another instinct, far more dangerous than the need to be right. Your brain's addiction to immediate rewards. Think about social media. One swipe, a new video, one tap, a notification, one refresh. Something new appears. Your brain loves it. Every tiny surprise releases a small amount of dopamine, the chemical that tells your brain, do that again. Now think about trading. Every candle moves, every tick changes, every second. Something new happens. The market becomes an endless dopamine machine. And that's where the trap begins. Most traders don't become addicted to making money. They become addicted to taking trades. There's a huge difference. Imagine a fisherman. Does he throw his net into the ocean every 30 seconds? Of course not. He waits. Because fishing rewards patience. Trading does too. But your brain doesn't like waiting. Waiting feels unproductive. Waiting feels like you're missing out. Waiting feels like someone else is making money while you're doing nothing. So you take another trade, not because your setup appeared, because your brain wanted stimulation. This is why overtrading feels so natural. Your biology rewards activity. The market rewards restraint. See the contradiction? One part of your mind says, do something. The market whispers, do nothing. And almost every beginner listens to the wrong voice. Professional traders understand that boredom isn't the enemy. It's often a sign you're being disciplined. Imagine sitting in front of your charts for 3 hours and taking 0 trades. Most people would call that a wasted day. A professional might call it a successful one. Because they know every bad trade avoided is just as valuable as every good trade taken. That's something your brain doesn't naturally understand. It celebrates action, not restraint. Here's a strange experiment. Imagine 2 traders. The first takes 20 trades today. The second takes 1. At the end of the month, the second trader makes more money. How? Because quality compounds. Quantity compounds mistakes. Wall Street figured this out decades ago. That's why many institutional traders have strict daily limits. Not because they lack opportunities, because they understand decision fatigue. Every decision uses mental energy. The more decisions you make, the worse those decisions become. That's neuroscience, not opinion. By your 10th impulsive trade, you're often no longer trading your strategy. You're trading your exhaustion. And exhaustion looks surprisingly similar to confidence. That's why some of the biggest losses don't happen. Because traders didn't know enough. They happen because traders couldn't stop. The market doesn't pay for constant action. It pays for exceptional judgment. And exceptional judgment requires something your brain naturally resists: stillness. Because the greatest edge in trading isn't reacting faster. It's knowing when not to react at all. But there's one final instinct, the oldest instinct of them all, that quietly controls almost every financial decision you make. And until you understand it, trading will always feel like you're fighting yourself. There's one instinct, older than civilization itself, older than money, older than markets. It's called loss aversion. Psychologists have studied it for decades, and they discovered something fascinating. The pain of losing is roughly twice as powerful as the pleasure of winning. Think about that. Making $1,000 doesn't feel nearly as emotional as losing $1,000. Your brain treats those two events completely differently. Now imagine what happens inside a trading account. Every losing trade feels like a threat, not just to your money, to your identity, to your confidence, to your future. That's why beginners hold losing trades for far longer than they should. Because closing the trade makes the loss real. As long as it's still open, the brain whispers, it might come back. Sometimes it does. And that's the most dangerous part. Because your brain learns the wrong lesson. It starts believing that ignoring risk works. Until one day, it doesn't. One trade, one news event, one unexpected move, months, or even years of profits disappear. Not because the trader lacked intelligence, because they trusted hope more than probability. Hope is a beautiful emotion. In life, it's a terrible risk management strategy. Professional traders understand this. They don't negotiate with losses. They don't argue with the market. They don't hope. They respond. Imagine a ship crossing the ocean. If the captain notices water entering the boat, does he wait and hope it stops? Of course not. He acts immediately, because small problems become disasters when ignored. Trading works exactly the same way. Small losses protect accounts. Large losses destroy careers. This is why professionals often look almost emotionless, not because they don't care, because they accepted something. Most retail traders never do. Losses are business expenses. A restaurant pays rent, an airline pays for fuel. A trading business pays through controlled losses. They're not failures, they're operating costs. Once you truly understand that, everything changes. You stop asking, how do I avoid losses? You start asking, how do I keep my losses small enough that my winners can easily overcome them? That's institutional thinking. Not because institutions are smarter, because they've learned that survival always comes before growth. Ironically, the traders most obsessed with making money usually lose the most. The traders obsessed with protecting capital are often the ones who quietly build fortunes, because capital is opportunity. Lose the capital, and you lose the opportunity. Protect the capital, and opportunity keeps returning. That's why the market doesn't reward courage. It rewards controlled courage, calculated courage, disciplined courage. And that brings us to the final realization, the realization that explains why trading rewards the exact opposite of almost everything your brain naturally wants to do. Once you understand it, you'll never blame the market again. You'll realize the real battle was never on the chart. It was inside your own mind. So, why does trading feel impossible after everything we've explored? The answer becomes surprisingly simple. Because the market rewards the exact opposite of what evolution programmed you to do. Your brain wants certainty. The market offers probability. Your brain wants excitement. The market rewards patience. Your brain wants to avoid losses. The market requires accepting them. Your brain wants instant rewards. The market pays those who can wait. That's the conflict. Not between you and Wall Street. Not between you and your strategy. Between you and your own instincts. Think about every great profession. A surgeon learns to stay calm while everyone else panics. A firefighter runs toward danger while everyone else runs away. A pilot trusts instruments instead of emotions. Every elite profession requires people to overcome their natural instincts. Trading is no different. The market isn't testing how intelligent you are. It's testing how disciplined you are. Imagine two traders. Both know the exact same strategy. Both understand market structure. Both recognize the same setup. One follows the plan. The other hesitates, moves the stop loss, takes profit too early, revenge trades after a loss. Years later, their lives look completely different. Not because one knew more, because one controlled himself better. That's the lesson. The greatest edge in trading has never been hidden inside an indicator, or an AI model, or a secret strategy. It's hidden inside behavior, because behavior compounds. One disciplined decision doesn't change your life. 1,000 disciplined decisions do. One emotional mistake might not destroy your account. 100 emotional mistakes almost certainly will. This is why the richest traders often appear boring. They don't chase excitement. They don't need constant action. They don't celebrate every winning trade or mourn every losing one. They simply execute again and again and again. Eventually, consistency becomes confidence. Confidence becomes patience. Patience becomes profitability. And profitability becomes freedom. Here's the irony. Most traders spend years trying to master the market. The professionals spend years mastering themselves. Because once you master yourself, the market becomes much easier to navigate. Not easier to predict, easier to survive. And survival is what allows compounding to do its work. One day, people will look at consistently profitable traders and assume they were gifted, lucky, naturally talented. They'll never see the thousands of small decisions made correctly when nobody was watching. That's how wealth is actually built. Quietly, patiently, one disciplined choice at a time. So stop asking, how do I beat the market? Start asking, how do I stop my instincts from beating me? Because the day you understand that is the day trading stops feeling impossible. Not because the market changed, because you did. If this documentary changed the way you think about trading, subscribe. Because on this channel, we don't chase shortcuts or hype. We study the psychology, the timeless principles, and the mental frameworks that continue creating profitable traders in every market and every generation.